All right. Good evening, guys. You are once again welcome to our live session this evening. We're still in the month of June, of course, and the month is slowly winding down. Today is 19th of June, 2025, and so far we're having a very fantastic month. I'd like to go through the chat now to show you guys what we're up to, what we're looking at, the trades we have running, and I think we'll take it from there. So, permit me to share my screen, which I will do in a bit. So, all right. Can you guys see my screen? Just making sure we're all on the same.
Yeah, of course, we can see your screen, please.
All right, that's good. So, yes, let's go over the charts and see what we have. So since our last session on Monday, we've not had so much, but we can see that the market has been moving sideways. I think the only currencies that have picked our interest, my interest in particular, is just the US dollar, I think the New Zealand dollar, and then Australian dollar, which will go up over in a bit. So since Monday for the JPY, nothing much has changed. Cat JPY is back at the key level. We need a breakout. It's not happened yet. We need price to close well above the key level so we can then look at the retest. I like to think that will happen in the future. And yeah, just see. Let's just hold up and see if that happens. CHF JPY interestingly broke out, which is very good. And like I said before, it just helps the overall move to the upside. We remember how we waited right here. Price got against several times and failed to break out, but we stayed patient, and now we have the breakout. Of course, this is not a guarantee that the trade will play out, but it's just a step in the right direction. Yeah, I think that's about it. So the next high to look at is where we have the black line, which is around 179. After which, if price able to clear this, then of course that helps the overall bullish move to the upside. So we'll see how that works out. Euro JPY is also of interest to me. We broke out. Oh, we're breaking out this month, and yeah, very good, very good. So since we're having the breakout, if we are able to stay like this above the key level, then if price is to pull back, retrace a bit, I would love to see a retest at 163, which is the key level. If that will be a break and retest, then that'll be next month. Of course, we need price to stay above the level this month to have a successful monthly breakout above the key level. After which, I'm looking for a retest on real JPY to be prolonged. But it's still a long-term idea, which will take time to play out. So yeah, I still have to be patient when I'm dealing with this setup. Okay. Anything else? So yes, next up is pound JPY. Still kind of sideways since our last update. Kind of sideways. Price is kind of trying to test this monthly level of support now. I also have a feeling that before we have the upside confirmations, it might still come down to really find support at the level before moving to the upside. But either ways, I'm long. I bought way back in April. I think most of us were here when I took these longs. I bought around 188, and I am planning to hold up until 206. So that will be quite the trade. That will take some time, of course, it will. But I'm happy to stay patient to wait for this to happen. So for those of us who might be looking to get in, like maybe with entries or something, let's see how price reacts to this monthly level. And I think yeah, they will take it. This is like a weekly monthly level of support, and if we continue to find support here, then we might just have to move to the upside. Of course, it's not a guarantee, definitely, but this is just like part of the framework we're looking at. So let's see if it works out. NZD JPY is here, I think, also testing the level. Not much has happened, right? Since our last update, not much has happened. So still testing the level, still expecting upside continuation, so nothing too crazy on these guys. USD JPY still moving sideways in my opinion. Dollar is kind of picking up strength. I think we saw evidence of that yesterday after the Federal Reserve of the United States decided to keep interest rates unchanged, steady at 4.5%. So dollar picked up momentum out of that. But yeah, we'll come to the dollar properly in a bit. So this is UJ. I still expect upside continuations, of course. But it's also very likely that we might see it dip to the key level first before we move up, or price might just break out of this consolidation before we move up. Whatever the case is, I don't really have any opportunities to buy UG at the moment, and I think I can just only analyze this from the sideline. So, AD card, still nothing, right? You're looking at my arrows, what I'm expecting. We're just moving sideways, but of course, overall, I expect downside continuations. Euro card, we're once again picking up momentum, so I expect further upside continuations, clearly. I've been long. I took longs last month in May, and which is about a month holding Euro card. We're up almost 1%, which is quite good. We'll see if this continues to move in our favor or if it continues to drag along to the side. Pound card is also of interest. I noticed that price is trying to maybe find support here, which might be a good thing. It would help the overall bullish confluence if price is able to find support at this zone. It might be like a demand zone, I guess. But overall, it just helps the bullish confluences we're looking for. And let's see, I hope price stays above that zone. Because if that breaks, then we might come down to test this once again. It might just take a much longer time for pound card to clear. So yeah, let's see how this plays out. Remember that we asked the question with this pullback to this level, right? Price made a higher high and has pulled back to make what seems like a higher low. But we know, like I've said before, that when price makes a higher high and tries to make a new higher low, we cannot confirm if that is the higher low until that low has presented a new high. So far, this is the supposed higher low, but we don't have a new high just yet because we came back from the four highs. So we're still expecting a breakout to confirm that this is the higher low. And the question is, would this still be high low? We don't know yet. We have the to confirm to answer the question. The question has not yet answered. So that's why we're still patient with pound card. We'll see this question will very well be answered. So yeah. But yeah, besides that, if we have a breakout, then of course that just helps the overall idea. Move on from there. NZD card is also moving sideways. Still nothing for me, to be honest. Yeah, about 2 months of just no headway, right? Just 2 months of complete sideways movement. And this would mean that there will be a breakout soon, either to the upside or to the downside. But of course, we should expect a breakout in the next couple of weeks, or maybe even more. I mentioned before that NZD card is a minor pair, and it will tend to move slowly move, and it's something you have to understand if you want to trade the pair. So you don't expect pairs like this to just run 100 or 200 pips in a day. You can expect that from like the dollar pairs, maybe the JPYs, but like pairs like NZD card, you don't really do much of that. US card, nothing too crazy, right? So two things I'm waiting on for USD card. Either we come back here and find support, move to the upside, or we break out and pull back and then look to go long. As long as price is in between these two regions, I can't do much or speak much on USD card. So just allow price to do his thing and wait for the opportunity to set up. Yeah, I'll take that if it sets up. Your AD, nothing for me. Your NZD, nothing for me. Let's see. So on the money time frame, it's looking like we're going to finally have the breakout. And I mean, we just might be fortunate enough to get an opportunity on your NZD. We just might be. Who knows? Like, I think about this. We're having a breakout right now, and If the candle stays above the key level, then this might just be a breakout, right? And then it means that next month we should be expecting a retest, not maybe expecting, but being anticipation of a retest if it comes. And pound NZD has been dragging along, moving sideways, and who knows, it might just keep moving sideways until next month. When year ended, it might just come down here and test. And of course, not a guarantee, but this might just present another opportunity for us on year ended. Let's see. It just might be a good opportunity to buy. So far, the breakout, we're watching it, and we don't have to wait until the month ends to see if the breakout is indeed confirmed. After which, we can then look out for the pullback or the retest. Pound AUD, I've expressed my intentions. I would love to buy the key level, but so far, like I said, we've not had the opportunity to get these entries. And yes, I can't do much about it. I can only wait for price to come. And if price is not going to come back, then yeah, oh well, it's just my mean love. I wouldn't be able to get my notes. Yeah, that's it. That's the point. Pound NZD. Yeah, this pair is toying with our emotions, I think, because this is like what, the 6th time it's trying to test the level. But yes, again, we see evidence, right? Evidence of this level being a key level right here. This is the same thing I've been speaking of as to how key levels are so important. Now you're seeing evidence of the level yourselves in real time. So whenever price comes, if price is to leave this level and it comes back in the next 5 years or 6 years, whatever the case is, you can vividly confine in the level. Why? Because 5 years ago, you saw how price reacted to the level, right? And this is what happens. This is what I speak of when I say that the levels have stood the test of time. Okay? So the same way we are seeing reactions at the levels here, in the same way they reacted to these levels in the past. 10 years ago, maybe even 15 or even 20 years ago. And that's how it is for most of these pairs, most of the assets we trade. So this gives us a first-hand experience as to how solid a key level can be, right? So when you hear of 2.23 as a key level in the later years, if price comes back to it, you can then testify that yes, I traded pound NZD 6-7 years ago. I bought at this price. I watched price stay at the level for quite some time before it moved, right? You can testify to this fact because you now are seeing the power of key levels right before your very eyes. So once again, it's not a guarantee. There are no guarantees when it comes to trading, of course. But this is evidence that it might still stop out. Who knows? We might have a drastic change in the UK. The British pound might lose so much value. We might have more sellers trying to break this key level. That can happen. But until that happens, we just stay on the trade, right? Stay holding our buys and see if once it kicks back into our favor, right? So yeah, that's for pound NZD. So we're back at break even. So I think I don't think I have any trades in drawdown now. Do I? Not really. So I think we're back at break even. AD USD is trying to pull back the level, and this is what I said about allowing candles to close above levels to be sure that we have a breakout. So far there is still no breakout, right? There is still no breakout to the upside. The dollar is still trying to maintain its strength, at least against these minor currencies like the Australian dollar and the Canadian dollar, Japanese yen, the New Zealand dollar. Yeah. I think that is why the dollar has gained so much strength. So of course, like we said, the Federal Reserve of the United States, they decided to keep interest rates the same yesterday in the Fed meeting, and yes, the dollar gained so much strength up that. I think we saw that happen yesterday. So yes, that's AU. EU pulled back. Right? EU pulled back. I think yes, EU pulled back slightly, and it is still possible for the dollar to gain strength and for EU to have a complete change in direction. That can still happen. I am prepared for that. Very prepared for that. But personally, I would just love to see price get up to 1.18 at first, just to give me the weight before we have that downside reversal. Whenever I have my positions against the dollar, I am very careful because, again, like I said, It remains the world's reserve currency, and it is in fact the most dominant currency. It is the strongest currency in the world. We don't deny that. And you always have to be careful when you're actually against the dollar. Of course, you want to ride the waves if it presents itself, but you always have to keep that in mind as you do so. And that is why I am not so overly exposed. And if for any reason I take a loss, it will only be a 1% loss for EU, maybe a 1% loss on USD. It is not the end of the world, right? I mean, most institutions are taking more losses than me this year, so I don't have a problem with that. So yeah, this is me, long on EU, and I just have to stay awake, right, and see what happens. Pound USD as well. I'm not long, but I was hoping to get long. If we pull back deep enough and find support at this level, I'll also throw in the longs on pound USD, and we'll see where it takes us. Either we move to the upside or to the downside. We'll find out. Of course, we also have geopolitical tensions, which is something you see. As traders, one thing whether you are a fundamental trader or a technical trader, one thing you do not include in your analysis is wars, geopolitical tensions between countries, nation rising against nation, and kingdom rising against kingdom. These are things you don't include in your analysis. Why? Because they are pretty unpredictable. In most cases, you don't expect to see it coming. And then when you have your analysis, you don't really cater for that. But that's why we have risk management. And that is why you understand how it is almost impossible to have guarantees when you trade. Because, yes, you could have the positions on a Friday evening, the market has closed. But then for the Monday that the market is going to open again, a lot of things has happened where one country has bombed the other. A lot of things can happen in that weekend that can ultimately change the direction of the market, right? So you need to make sure at the end of the day that you have your risk management up to par, especially when you are looking to manage bigger portfolios, more money, especially external investors. These are things you need. You see, like I said, risk management is like the biggest thing. This is the biggest thing. If you cannot properly manage risk, then you cannot really succeed in business. I have said before that returns are only as good as the risk that goes with it. Okay, I'll give you an example of someone who can make 80% in an annual year, and if you check his drawdown is like 40%. But then there is somebody else who was able to make 25% with a 5% drawdown. You see, in natural sense, when you compare the Sharpe ratio, the Sortino ratio, and the risk or the return over risk, the person who came up with the 25% return is a much better trader than he who had an 80% return with a 40% drawdown. Okay, so the return is only as good as the risk that goes behind it. So I'm using this to explain my positions on the dollar pairs and even all the trades I have, expressing how much importance I place on risk management. So this is always something that we have to remind ourselves of. All right. So yes, for pound USD once again, let's see if we pull back deep enough, find support, a lot to go long. And for NU, exactly. So same thing with NU, we still don't have a clear breakout. So very similar to ADUSD. I still expect downside continuations, even though if price comes back to the key level, I'll look to sell. But from here, I still expect that price would see more downside. Now, again, it is interesting to see how levels react and how price can stay at a particular region for so long. Yet, if you were trying to sell at this level, you might have been taken out 2 or 3 times. And this explains why I like to use a wider stop loss to cater for things like this. I know it reduces your reward, but of course, it also increases drastically your win rate. It's a method I've adopted, and it has worked for me pretty well, and I don't plan to change that in the near future. But yes, enter the USD, I expect more downside, and we'll see if it works out. We'll see if price ultimately crashes downside. For the Swiss franc pairs, I've expressed my intentions. Nothing interesting, right? ADCHF, CAT CHF, there's just nothing for me in these guys. Today, though, the Swiss National Bank, they reduced the interest rate from 25 basis points to 0. So what it means is for, I think the condition that the Swiss franc is in right now is what the Japanese yen used to be in years back. What it means is, before now there were no interest on the Japanese yen, right? Now, so far, because of um, the cut in interest rates from the Swiss National Bank, they're not interested in also the Swiss franc. I said before that it seems like the Swiss franc might go into negative rates. I have a feeling, not just a feeling, but some of the research I've been conducting is showing that the Swiss franc might go into negative rates. It is not. There are some problems with the economy and the currency itself. And right now, of course, it would act as a safe haven, but all of these things are still, in my opinion, very temporary. But let's see if that happens. I am also, like I said before, I'm also very careful in the way I try to include fundamental analysis into trading because I don't personally use it in this particular system. But of course, it is very applicable in other systems that I use. So one thing I've also said is that for people who use fundamentals, I have come to see that many persons use fundamentals differently. Okay, I have seen situations where a fundamental data comes out and I would see different analysts, different fundamental analysts calling for opposite ends of reactions. Okay. Right now, as we speak, there are fundamental traders who are expecting huge moves on the dollar. They're expecting the dollar to pump all the way back to 110 DXY, for the dollar to gain too much strength. With the same economic data we're receiving, all of us are receiving virtually the exact same economic data. We're seeing it. But you can see how economists and fundamental analysts are predicting very diverse situations. So with the same economic data, someone is predicting for a dollar rise, and with the same economic data, someone else is predicting for a dollar doom. And these are both fundamental traders in themselves. And then you begin to wonder, okay, who then should I listen to? And how can I go about fundamental analysis when it is not exactly fixed? You can use it to denote anything. You can use certain economic data and data points to predict something else, and other persons can use other data points to predict something else. So yes, fundamentals are very important, but once again, context is key, and learning fundamentals is also not easy. So this is something I am trying my best to take. I'm taking my time to do this, making sure I come up with like a proper result on how to properly incorporate it with technical systems. I haven't found the best way to do that like in a universal way. So it seems like I have to apply them individually to the systems that I trade. So I think that's just. I know some of people have asked questions about fundamentals, and I kind of delayed speaking much on it because of this reason. I don't want to teach or explain fundamentals in a way that might get you confused, as last night. So I want to make sure I have the better understanding myself, so that when I explain it, it will make so much sense to me. And also for you to understand that at the day, people use fundamentals differently. Okay, this is something we all have to understand. I think it's all play right now. So for the Swiss franc pairs, still nothing interesting. I only have sales on USDCHF, and yeah, I don't know. Let's see if it plays out. We're back at previous lows. These are extreme lows, and it might be tough for the dollar for USDCHF to break because, like I said, we're at extreme points in the market for the Swiss franc pairs, and the dollar might just find a double top here and switch to the upside. That can totally happen. So I'm still watching USDCHF to decide if I will just take profits right there at the previous low, or if I would want to extend and wait for a new low to be formed before I get out of the trade. But yes, I'm still short, and if I make any changes, of course, I'll let you guys know. But most of us are maybe selling USDCHF. So yes, this is the most I have for currencies, and if you don't have any questions, I can then move over to indices and metals. So please, if you have a question, just go right ahead.
All right, Casey, I have a question.
All right, go ahead.
Okay, for the news that came up earlier today on the Swiss franc pair, that they actually cut interest rates from 25 to 0, I think. That actually depicts a negative impact on the Swiss pair. I guess so, right?
Yep, true.
Okay, okay.
And
Okay. I'll go ahead.
I was saying yes, and they might even go into negative rates. Yeah,
Okay,
so it's negative.
okay.
It's not the best.
Okay, but if that's actually the case, from the chart, I'm actually seeing these Swiss pairs um like on a much lower percent, a negative percent, that trying to show that they're actually gaining strength. So like you might probably say it's for some pairs. For instance, say the AUD pair, maybe the AUD is actually suffering. Fine. The Canadian dollar as well, the euro as well. I actually think euro is not that strong, because like I think euro is suffering across board, if I'm not mistaken, maybe just against the AUD and the NZD. But the main interest on this Swiss pair, I'm seeing USD CHF with the strength of the United States dollar, and this Swiss pair is actually like trending over it. I don't know if you understand where I'm coming from. Like for the
Yes.
NZD pair, no problem, because I think today the New Zealand dollar is just so messed up. But my interest is on this USD pair in particular, because here pound is like really showing that yes, it's actually gained strength and all that, because like pound is so strong across every other currency like for today. And I was thinking the United States dollar should have done same, but seeing that even with the fact that the Swiss francs cut their interest rate, is still showing very big strength over the United States dollar. I don't actually know why. Then my second question is, for the fact that the Fed kept interest rate the same for the United States dollar, I don't know if such fundamental news come up. Is it that this news always have a particular amount of time that they tend to last? I don't know if you get my question. Like for instance, this news came up yesterday, being Wednesday. Like maybe this news. Sure, when news when fundamental comes out like this, it's like show high impact on the chart and all that. But now I'm now looking at like long term, for how much time would it take for this news to be showing impact on the market? Is it like till the next peak, like maybe the next month, the next 2 months? So that's actually my question, my second question. Thank you, please.
All right. Yes, fine questions, and these questions are really related to fundamentals. So the first question, despite the fact that the Swiss franc is supposed to be weak, right? Why is it gaining strength, especially over the US dollar?
Yeah.
You see, like I said before, sometimes when we look at these things, these percentage returns on these pairs, they greatly, for the most part, indicate sentiment. So let me give an example. For example, let's look at the Swiss National Bank today. They cut interest rate by 25 basis points. You see, when you refer back to the Telegram text I sent, you will see something where I said, let me go back and see. Right. So the Swiss National Bank cuts interest rate by 25 basis points to 0% as expected. You see, there is one thing to have data, and there's one thing to have the market's reaction to data. So, for example, if they were already expecting it, you might not really see so much of a reaction, right? If analysts are expecting something, or if the market is expecting a particular data to drop exactly as they expect, you may not have so much reaction from it. You get. So, and then context always matters. So, for example, for the Swiss franc, for the most part, it was expected. So, it's not a surprise, right? Then long term, you see, when it comes to interest rates, their effects are actually long term, not necessarily short term. Okay, so when you see a news event come out for example, interest rates, then the market will react to that news event for that time, which is of course sentiment, and then the effect of that news will take time over weeks and months, right? Maybe even years. It depends on what we're dealing with. So that is why you're not exactly seeing that the Swiss franc is so weak and that all other currencies are getting straight off of it, because it's not a surprise. It was not a surprise that it's the core rate, right? It wasn't. Also, with the dollar pairs yesterday, it wasn't really a surprise that they held rate. It was expected. So what gave dollar strength yesterday was mostly Joe Powell's his statement after the meeting, if that makes sense. What he said about the economy, the labor market, if it was very strong, inflation, the tariffs that came in, and what they would mean. These are the comments that might, for that particular time, make the dollar strong or weak. So again, sentiment, right? These are just feelings and emotions at that particular time when the news comes out. And then that tackles like the first question. And I think your second question was also highlighting as to how long the effect can take. It can take weeks and months. It just depends. Also, we don't, you see, fundamentals greatly discuss the strength or weakness of an economy. Okay, that's what fundamentals generally discuss. And we don't use one data point to make a comment on the strength of an economy. What it means is, if a bank of a particular country decides to cut interest rates and another bank decides to hold interest rates, you might ordinarily think that the bank that decides to cut would lose more value than the bank that decides to hold. But then context matters. What are the other surrounding factors that made them cut, or what is making this bank to hold? These are the things that matter. So we use several economic data points, not one. So you cannot understand the scope of an economy, the real strength of an economy, when you don't have several things put together. And also, knowing what to look for is important. Because for several countries, the data points might differ. Some countries that deal heavily on manufacturing, some countries that deal heavily on sales and exports. You see, what you check for in that economy that makes it strong might not be the exact same thing you check for in a different economy, right? So again, it takes multiple factors to determine the strength of an economy, which is why I've said that on a global scale, the US dollar is still the strongest. You get it? On a global scale, the dollar is still the strongest. You might wonder, okay, if it's the strongest, why then is it weak? All right, right now it can't be weak. It can't, all right? Because several factors right now make it weak. Doesn't change the fact that it is the strongest. Let's look at the Japanese yen, for example. So we saw this, right? This was a huge dump that happened last year. The Japanese yen, the country in itself is not looking good, okay? But then the Japanese yen gained so much strength that it wiped out almost what? Let's say a whole year of gain or 6 months of gain in less than 4 weeks. Why would that happen if the currency is still very weak? That's to tell you that a currency that is weak can gain strength momentarily. Okay, a currency that is weak can gain strength momentarily. But then, if you think about it, I have been long the whole time, right? Since we came back here, I have always been looking for loans. And now you see how the loans are faring. Because long term, Japanese yen is no match against the British pound. The economies are not the same. Japanese yen is even suffering even more. Wages are dropping. A lot of things are just going wrong in that economy. So even though this is moving sideways, or this was pulling back, it did not change my outlook, right? So this tells you that it is not just about what the bank did to interest rates. Context matters, right? Context matters. So what they did, why they did it, and what are the other surrounding factors that would then explain what they might do in the next meeting. So if, for example, a bank decides to hold rates in this meeting, does it mean that they will hold rates in the next meeting? What if the several factors that come in show that they might cut rates in the next meeting? These are the things we check for. So again, I think that kind of explains the point. Just remember that you cannot fully understand the scope of an economy by looking at just one data point, just the fact that they cut interest rates. Now, retail sales, inflation, a lot of things, PCE, there's a whole bunch of things, that GDP, right? What else? There's too many things to consider to know whether or not the economy is looking good or bad. And again, like I said, people use fundamentals for different reasons. They can use it in a manner that you don't understand. So that's why I'm also careful to speak on it. So, but I think I've been able to explain to some extent. So I hope you get the point.
Yeah, of course. You have, thank you for that. But I don't know if you can actually look at the news coming up for tomorrow morning. What can you say about that? Like, I think that should be the retail sales you're talking about. That would actually have a much longer impact on the market. So, because like for tomorrow, there would be a British news. I think that should be on retail sales and also that of card as well. So I don't know if that's like the kind of news we're talking about. These are the news that would actually create a higher impact and a long-term impact on the market.
Okay, but to go at this again, it is not necessarily that interest rates don't have a long-term impact. In fact, they do. Okay, but I was trying to say, my point was, we don't just use interest rates as the only factor to understand if an economy is doing well or not. Okay, other factors come into play. Also, if we let me see, you mentioned some news events coming up tomorrow morning. Let me open up Forex Factory real quick. Or better still, let me open up sorry, hold on. Let me open up my FX. Let me see if I can show you guys something. Okay. Okay. Hold on. Mm, sorry guys, I'm just trying to get something on. Okay. So let me adjust my screen now. Let me share my screen and show you this. Just to give you a better idea. Uh, all right, so let me pick out a currency and just show you something. So um let me pick out the Japanese yen, for example, and apply this. Let's see. Okay, it's not working. Yeah, it's still loading. But can you guys see my screen though? Like, can you guys see my face part of my screen? Just making sure.
Yes, we can.
Okay. That makes sense. Okay, so now I've chosen Japanese yen, for example, and then let me just see if we can go over let's say 15 months, right? Today's what? Today's 19. Okay, let's see. And okay, so we've gone back to like the 1st of April 2025, and let's just see some things about. Okay, let me take this out. Let me take this. No import and apply. Nah, alright, let me try this. Okay, so wow, I have to do this again. Sorry. Yep. Okay, so like I said, there are some things you keep in mind when considering fundamentals. I mean, I'm trying to dwell so much on it, but at the same time, I want to make sense. So you check several things to know if an economy is doing well or not. For example, let's look at household spending. We have year over year, we have month over month. Now, household spending might be a big deal in Japan, right? But might not be a big deal in another economy. That's why I said it's not, in most cases, it's not fixed. You want to know what makes the economy strong, and then know if those indicators or those data points are doing well. And then you have to check over a period of months. That's why these are things you track. It's not just something, it's not just like a case of you see a news event, okay, retail sales came out good today, all right, but that's fine. You check months before. It came out good in respect to what? What was before? Was it better? Okay. Another thing I made mention of when dealing with importance is that you see consensus or expectations is mainly just sentiment. The real data lies between the previous and the actual data, right? So an example is let me see. I think I explained this before now, but let me see. If I have an example of something. Okay. I don't really have any example, but what I was trying to explain is there are some times where you have a data, an actual outcome. It might be better than what was expected, but it might be lesser than previous, right? The actual outcome is better than what is expected, but then lesser than what's previous. What it means is it came down from previous, but was higher than expectations. Now, in that moment, the market might cheer on that news, right? Because it was supposedly better than expected. But then in a real sense, it is not necessarily better because it was less than previous. So consensus or expectations, what analysts expect, is just mainly for the sentiments of the time. Did it beat expectations? Did it miss expectations? Yes, that's one thing. But then the main data you consider was what was the previous data? What are we looking at here? Was this a decline? Was this increase? Did this decrease? These are the main things you check for. So retail sales. We're looking at. Let's go up a little bit. Let's see. Household spending was up. Consumer confidence dropped. Consumer confidence in Japan is a big deal. As you can see, it's regarded as like a high impact news event. All right, beautiful. This is what I was saying, right? So this is Japan's balance of trade for March. Now it's in green. It says a better than expected result. Yes, true, but then it is only better than what was expected because what was expected was 485 billion yuan. But then it is lesser than previous because it was at 590, and then it came down to 544. So is it better than expected? Yes. Is it better than previous? No. So even though it's in green, it is not necessarily a better result, if that makes sense. Right? So balance of trade was not the best. Export year over year came in lower, drastically lower, right? So from 11.4% came even below expectations at 4.5, came in at 3.9. Inflation dropped. Core inflation came out higher than expected. Sorry, came out higher than previous, but as expected. Manufacturing PMI things were revised in March, so we don't really. I can't see the data right now. Industrial production, retail sales in March, okay, came up. Sorry, I thought we had retail sales before now. Okay, household spending. So retail sales came up. Housing stats came up, which is quite good. But then you see now that you don't just use the fact that retail sales came up as an indicator to say, okay, that means that the economy is doing well, because then you just automatically neglected all the other data points we're looking at, right? So retail sales came up. Then look at what the Bank of Japan did. They kept interest rates the same as 0.5%. Now let's come to May. Consumer confidence dropped yet again. Now let's come to April. Consumer confidence was at 34.8. It came up to 34.1. That's a decline from the previous data. Now let's come back to consumer confidence again. Where's that? It came in at 31.2, which was also a decline from the previous data. So you can see that consumer confidence in Japan is reducing. It's like a consecutive decline in consumer confidence. Now, is consumer confidence a big deal in maybe another economy like maybe the US? Of course it is, but like again, the data points we're looking at would matter based on the economy you're dealing with, if that makes sense. So consumer confidence came in lower, unemployment rate is higher, not good. Household spending came in higher. Now look at household spending year over year came in higher, but look at what happened in March, right? It dropped from 3.5% to 0.4%. Now, even though it was higher than what was expected, because they were expecting a minus, but it was also a big decline from the previous. You get it? So, what else? Let's see. GDP growth came in much. Look at this. It was at 2.4%. It came in at minus 0.7%. Look at this. It's a bad data in Japan, right? It's clear it's not the best in Japan. What else? Exports came in lesser. Balance of trade came in lower. Let's see. Do we have balance of trade before now? Hold up. Good. So we had balance of trade in March. Any questions, please?
No question at all. I was about telling you we had balance of trade, and then my question was on balance of trade because like the actual is way higher than the expected and also lower than the previous. At this point, it's coming out green, like positive, because it's actually higher than the expected, but it's way lower than the previous. So, will you really call this like, is it like one of the best results for the fact that it's even lower than the expected? Like, would the case be different in a situation whereby it is higher? It is positive, like being higher than the expected and also higher than the previous. Would there be like a kind of a different impact for the fact that it is higher than the previous compared to the fact that it is higher than the expected while it is lower than the previous? I don't know if you get my question. So would there be like any kind of difference in these two scenarios, please?
Of course there would, right? There would, but again, it would matter. You need to see consecutive build up in that particular data. Also, you need to see if the data is so important when dealing with the economy. So, of course, if it is higher than previous, higher than expected, that's good. And if it happens consecutively, that would mean that there's a change in the economy. These things take time, right? There might be a change in the economy in that particular aspect. But of course, that aspect is not the only thing you're looking at. So that's why I said when you are checking the overall strength of an economy, you check a bunch of things. The only thing you need to learn what to look at. And this is the thing I've not explained to you guys yet. You see, that's why I don't stress this. That's why I don't delve too deep into the fundamentals, because I'm not ready to give you guys the proper explanation that you deserve. You get it? But now let's keep going. Balance of trade came in at okay, we dealt with this. So I think we have balance of trade second time. Where's that? All right, good. So now here's this balance of trade. This was revised from 544 to 559. But now look at what it came out as. It came out as 115, lesser than expected, lesser than previous. Again, not the best of results, right? Not the best of results. Inflation also, okay, stayed the same. Basically, let's see if we have more data. Core inflation increased Inflation rate year over year came out the same thing. Let's see, consumer confidence ticked up a little bit higher. So this is higher than previous, but also it just kind of went back to the previous month's result because last time we checked consumer confidence, it declined twice. Now this is a tick up higher, but if you look at the few months before now, it is still low, right? So that's why I said again, you look at the data, but then what do you compare it with? Right, there's just so much to compare it with. Look at unemployment rate stayed the same. Retail sales came up a little bit higher, which is good. Unemployment rate stayed the same. Retail sales came in higher. Capital spending increased. Household spending decreased, right? Which is also a big deal. GDP growth came in at 0, basically the exact same thing. Analyzed growth came in at what's that? A decline from 2.2% to this. So again, it's not the best. It's not the best in Japan, right? It's not the best in Japan. So let's see. Balance of trade. I think now we have an increase, which is up like to 637, which is good. But now, if you think about this is Japan, right? And there are other economies. But what we're looking at now is you want to compare this economy to a different economy, maybe the US. And the US beats this economy, hands down, right? It does. So you see now that, again, you need to know what to look for and how these things play out in your analysis, right? Fundamentals are so broad that you have to be careful how you use it. Okay? You have to be careful how you use it. So, but this is just to explain your question that you don't use the exact same thing. Okay? You don't use the exact same thing to figure out if an economy is the best or not. For example, look at earlier this week, in fact, just 2 days ago, the Bank of Japan had the exact same interest rate, 0.5%. Of course, there are no reasons to increase rates. They have no reasons to increase interest rates. And that's why it is in expectation. That is why it happened and nobody really said much about it because we expected it, right? It is when it comes out, it's when a bank does something that is not expected that it might begin to shape the markets. You might begin to see moves. Why did this happen? Why did they make a change? These are the things that begin to come into your head. But I think aside that, I think you guys kind of get the point, at least to some extent. So I hope this answers your question.
Yes, of course it does.
All right then. Okay, so any other questions? Just before I move what
before we proceed to indices, I was just thinking of something right now. So I don't know if you can hear me though. If you can confirm if you can hear me. Please
Sorry,
confirm
what?
if you can. Please confirm if you can hear me.
I can't really hear you well.
Okay. Can you hear me now?
Yes, I can hear you now.
Yes. So I was just thinking about something here, and it's like so. Normally, when we are back testing, we don't use all of these data to determine whether an economy is good or economy bad. We back test solely using the technical analysis, right? So then, why is it that when we are trying to, trade life, we have to use all of these things to also decide as to whether an economy is, because I realized that some of my colleagues that I knew trading back then, sometimes when there is an important news coming like say on a Friday or Wednesday, they don't trade because they think the market is very volatile and then their analysis might be thrown out of trading to the bin. But normally when the back testing, we don't bring all of these data or don't view all of these things and then say, okay, so at this point this is what's happening. So this data or this economy should be, that's why this and this happened. So I don't know if there's a way we can backtest using both data, both data and then technical analysis, or you change the technical analysis and then as we trade life, we combine it.
Thank you for your question. It's a fine question you asked. It's a fine point you raised, and this was my point. This is what I was saying when I said, when you're backtesting your systems, you don't check for these things, right? You build your system solely off the charts, and when you're now trying to trade live, you're trying to use variables that you didn't have in your backtesting sessions to now determine whether or not you should take a trade. And this is what I meant by I don't use this. Like I use this in systems that I apply this to, right? Whatever happens with the news event don't have an impact on my system. It doesn't. Why? I didn't build my system with fundamentals. These are solely of technical. And that's why when you see a news event coming up and then you're wondering whether or not you should hold a trade, it makes no sense, because when you were testing your system, you didn't check for these things. I mean, think about it. If you went back to April and tested your system up until now, you'll come up with the result, right? Now, all of these things that happened between April and now, you didn't check for these things in your backtest session. But if you tested between April and now, you come up with the result. What it means is, with these news events, whether or not they come up, your system would perform if it is good. Or when you go back in time, there were always news events. Okay, if you go and test throughout 2024, there were a bunch of these events. If your system performed well in that time and in other years, it means that your system can perform, right? Ultimately, it will perform. I don't know if that makes sense. So you see why I am not big on waiting for a news event to come up and know what to do with my position. If NFP is coming up on Friday, I want to close my trade so that it doesn't stop me out. I'm like, I mean, why would it stop you out? If it stops you out, is it because of NFP or is it because of your system? So we have to be careful about how we use our system, because most times we bring in things that were not in the backtesting sessions and use them to trade live. These were variables, these were things we did not have in the backtesting session, but we're using them to trade live. So imagine me trying to find out if retail sales would come out higher to decide whether or not I would hold or close my trades. Or imagine me trying to check for effort. These are the things I did in the past. I don't do them anymore. It's wrong. It would only make sense to use fundamentals directly in your trading if you use that to test, if your system is built like that. But if you do not build a system in that manner, then in my humble opinion, it doesn't really make any sense. Unless you're trying to adjust your system and then bring in fundamentals. Not that you're just momentarily looking at one of the fundamental data and you're trying to check if you make your trade play out or not. It doesn't, in the grand scheme of things, it makes no sense. So to answer your question, test your system how you would, right? And trade live how you would. Use the exact same variables used in your backtesting sessions to trade live. That's it. If you want to use fundamentals, then yes, learn how to incorporate fundamentals in your system. First of all, learn how to use fundamentals and learn how to use them properly. I think aside that, that's why you see I don't speak much of fundamentals. I don't use them to. Okay, look at this week, for example. We've had I think 4 banks coming out with interest rate decisions. I didn't look at these banks to figure out what to do next. The charts are the same, right? That is as though nothing happened. Why? Because my system is purely technical. I don't necessarily need a bank to do this for me to know what to do next. I mean, except in that situations. But I think this makes sense. This explains the point. I hope you're clear on that.
Yes. That's fine. Yeah. Thank you very much, Hassan.
All right. So again, I stay afloat with the fundamentals, mainly because I teach and also because I want to stay afloat. I want to know what's going on with the economies. But do they necessarily have a bearing on this system? No. Like I said, I have other systems that use fundamentals, but not this. Okay, and that's why when I'm speaking about the system, I don't really stress fundamentals. I do this to stay afloat, and also maybe to include the other systems I'm building or I'm working on. But for this particular system, it doesn't have any bearing. So yeah. So yeah, any other questions just before we move over to indices?
Hello?
Oh yes, promise.
Yes, I would like to ask you a question.
All right, go ahead.
How would you differentiate between a movement that is like a mistake or something that the market just moves? I don't know if you, how can I explain it? Let's for example, you are trading and you place the limit order. The market just hits your limit and then just goes for the stop loss and then keeps going down. It hits your limit, hits your stop loss, then goes to your direction. How can you differentiate if this is just the market moving and this is a mistake you've made?
How can I differentiate if it's just the market move or if it's a mistake? Well, first of all, how often does that happen? I think that's a big thing you want to consider. Secondly, the system itself, right? So is the system profitable? If it is, then I would like to say that maybe those situations are like outliers. They're just like once in a blue moon. But if it's a regular occurrence, and if this was not something you saw when you were testing your system, that might be something to check out. It may not really be the market just moving. Okay. Also, where around what levels do these things happen? Right? For example, I would expect these things to happen at key levels because I use them, and I've seen it happen several times. That's why I have like wider steps to pick up for situations like this. But how can you really differentiate if it is your mistake or if it is just the market moving? For the most part, if you hardly make a mistake when you're taking a trade, right? If your trades are in line with your system, then you don't really call it a mistake. You call it a loss, not a mistake. So again, how often does it happen? And I think that's the biggest question. How often does it happen? If it's just once in a blue moon, that might just be part of your system. But if your system is not exactly working, then that might be a problem. That might be a real problem. So just depends.
Well, it happens. I think it happened like twice when I was trading, which was today and yesterday.
On the same pair?
Sorry.
Did it happen on the same pair?
Yes.
Okay. Are you trading lower time frames?
Yes.
What time frames are you dealing with?
15 minutes.
15 minutes. Wow. I mean, you should expect more of that, right? Because most like that tend to happen on such time frames. So, quick question. While we're speaking of systems, have you started backtesting your system?
Yes, I am.
Yes. Okay. So, you'll find out more about this as you backtest. Okay. Was this a mistake? Is this the first time it's happening? Like you said, twice this week, but aside this week, has it happened before?
Not all the time, not necessarily all the time. At least maybe once or twice in a week.
Okay. Another question is, when you place these trades, are these trades you plan to take?
Yes.
Yes. Okay. Then it will be one of the few things. Now, first of all, I would love you to keep backtesting to see how well the system comes up. Secondly, because you're trading lower time frames, you should expect more of that because of there's like more noise in lower time frames than on the higher time frames. So that actually is like not so smooth. So if that is happening in lower time frames, it's pretty normal. I would say it's pretty normal because it's not like exactly surprising. I would be surprised if this was happening like on a daily or weekly time frame, but on a 15-minute time frame, it is normal to have situations like that. Normal in the sense that the market moves like that. It may not be normal for your trading system, but the market moves like that. So I don't know.
Okay.
But then you get to learn more about your system.
Backtesting.
Yes, that's what I'm trying to say. You get to learn more about your system,
Okay.
how well it does when you keep testing. So test more. What are you currently doing now? Like, are you testing? Like, what year are you trying to test?
EU.
Okay, EU. So, are you doing 2021, 2022? Which of the years are you trying to test on?
I've been testing since 2020.
2020. How long have you gone so far? How many months in are you right now?
I've gone up to May.
Okay, May. All right, so keep doing that, right? Maybe test for 2020. And so, yeah, guys, just a heads up, right? As you guys are testing your systems, from time to time, you get to share your screen and show us what you've done so far, what you came up with, and things like that. Okay. So, yeah, promise, and for the rest of you who are already testing, we'll see how far your system has gone in that particular year, how well it did not do, and things like that. Okay, so if you go up to like maybe December, and you now have like some sort of data, I think we can check it out.
When will that be? Because the backtesting system I do is it resets every month.
Are you using Traders Casa?
No, I'm using J-Forex.
Oh, J-Forex. I've heard of that. J-Forex. Okay, so here's the thing. It resets every month. So when did you start?
I started before you mentioned when we should backtest. That was last month. Yeah.
Oh, really? And when
month.
does it end? When would this reset? When would this reset?
Any this month, if you reset this month, so maybe I'll start again and continue
When
backtest. Then
exactly
I will
would
screenshot the moves.
when exactly would it end? Can you check? Is it possible for you to check?
No,
When
I'm on
exactly?
phone right now.
Okay, so all right, just reach out to me after now, maybe on Discord. Maybe let me know when exactly it ends. If it would end anytime after Monday, all right, then we can share your screen on Monday. Right? I think that's something we can do. Also, let me know the name of the website. Maybe text it to me, because I've not heard about the website before now. J-Bird, I've not heard of that. So maybe I can see for myself, see if it's software that is very good for us to use and test alongside Traders Cluster to find out. Okay.
Yeah. Okay. No problem. Thank you.
All right. Yeah. So where was I? Sorry, guys. Let me see. All right. So for indices, there's been a decline in indices. I like to think that the geopolitical tensions are kind of affecting equities, and that might be the part of what's going on. Also, we're very close to all-time highs, and we've not, in my opinion, we've not exactly gotten there. I think we're very close, but we're not quite. Judge by the candles, you can say yes, but you come up to like the little time frame. I think we have a little bit more room to hit our previous highs. So is it possible for us to get here and turn around? It kind of happened, absolutely. Hopefully not. Hopefully we get to see new highs this year. But let's see. So I think the S&P Browns 40 is pulling back. Nasdaq is also pulling back, of course. Yeah, we're just very close all-time highs. But yeah, I'm still long, still holding my trade. Let's see what happens. Ideally, we have like reds across the board because, like I said, I think equities are being affected by what is going on around the world. Yeah. Hopefully that situation changes down a bit. Gold is on the red side. Of course, this is also to explain why sometimes you don't expect a fixed outcome. We have geopolitical tensions, yet gold is not making new highs. You would wonder why is that the case? Gold is really like a safe haven in times like this, but why are we not seeing this happen? It is, like I said, context matters. It's not always the exact same thing. It's not fixed. I mean, if this was the case, everybody would be making money off of every geopolitical tension. But this goes to show you that that is not always the case. But yeah, this is gold. No new highs yet, but I think we'll have new highs at some point. Copper pulled back a bit. Nothing too crazy. Still long on palladium. Super long sort of platinum. Still moving higher, but like, yeah, I'm done with that. Silver is also above the highs. Hopefully, it stays like this for the month ends. And yeah, I think this is the most I have. Also, I have been slowly adding cryptos to the watch list. Slowly bring them up to speed. I am looking to get into cryptos well enough, and also diversify into like other exchanges, other stocks, and things like that. There's a whole lot coming, right? A whole lot. planned out. So let's see how this is continues to play out. So I might begin to speak on cryptos. Of course, I'll get confirmation from Momo first. I might begin to speak on cryptos once I have like a complete watch list, and if I have actually decent setup. If I have to go through them, I don't have like the best setups, and I just allow them, right, until something good shows up. But yes, this is the bit I have. This is the most I have. So backtesting, not much to say. So most of us here know the website Traders Casa. We've explained the importance of backtesting, how you need to backtest, and I think now it's just going to be the focus of discussions. I think onto a handful of us have been able to test their system for a while. So the discussion about backtesting will take a while, maybe take up to a month, because I want so many persons who are coming to the live sessions to be able to test their systems before we move further towards the end of quarter 3. So yes, if you've not done backtesting, please do. If you're already backtesting, continue to do so. If you have any questions, please reach out to me. I'll definitely help you out. And yes, I want you to learn more about your systems and figure out for yourselves if they work long term. Okay. So yes, any other questions? Any other questions? All right. So yes, if you have any questions, we might have to call it a day here. It was another fantastic session. Thank you for your questions. Right, your questions always make the session very lively because it shows you guys want to learn. And yeah, I'm happy when you ask questions. Okay. But yes, it was a fine session. I would most likely get this updated to YouTube before the weekend ends. So yes, I think that's all for today. Thank you guys for showing up, and our next session will most likely be on Monday. So yes, I will see you guys on Monday. Have a wonderful week. We'll see you there.
Thank you very much. Appreciate it.
Thank you very much.
Thank you.
Yeah, of course. Take care, guys.